Euro dollar. So while the euro remains locked within a downtrend, the market is right now correcting off that recent 108.09 low that we saw on the 20th of July. At this point, it's unclear whether the market is looking to put in a lower top now by that recent high that we saw last week at 111.30 in favor of the next downside extension below 108.09, or if we're still within the throes of this correction and the market is wanting to now trade a little bit higher before heading lower. At this point, ultimately, a break back above the high that we saw back on the 10th of July at 112.16 would be required to take the immediate pressure off the downside. Sterling dollar. So this chart looks very constructive, with the market putting in a series of higher lows, most recently potentially now a higher low in place at 153.50 ahead of the next upside extension back above the current and recent 2015 high at 159.30. A break back above 159.30 would confirm the higher low and open the next measured move upside extension up approximately to the 165 to 167 area. However, inability to take out 159.30 followed by a break back below 153.50 would take the immediate pressure off the top side. Dollar yen. So dollar yen continues to find some stiff internal resistance in the 124.50 area. The market did break above 124.50 last week, but just above 124.50 and wasn't able to hold on to those gains. So this 124.50 level continues to be some strong internal resistance, and we've seen some pullback since back below 124. At this point, the market would need to take out some key support right now at 123 even to confirm the potential top-ish outlook here in the short-term basis and accelerate declines back down towards 121.30, that critical low that we saw from back on the 8th of July. Overall, the uptrend remains firmly intact, and there's no denying this, but with monthly studies overbought and the market being well capped into the 124.50 area, there is risk for additional downside before we see any legitimate bullish continuation. Euro Swiss. So Euro Swiss has recently broken out above some key previous multi-day resistance at 105.75, and this sets the stage for the next upside extension in this market towards the February peak at 108.15. Any setbacks now should be very well supported, ideally above 105.75 on a daily close basis. So while we did see a break below 105.75 last week, the market held above this level on a close basis in favor of the next upside extension. However, ultimately, any setback should be certainly well supported above 104, with only a breakback above 104 to really put the pressure back on the downside. Aussie dollar. So Aussie dollar has been beaten down in recent weeks and months, with the market trading to a fresh multi-year low on Friday, down around the 72.35 area. But at the same time, the market reversed higher and took out some key resistance in the 73.50 area, which now potentially sets the stage for a double bottom formation that was triggered on Friday at on the break above 73.50 that could now open the door for a correction up towards the 74.50 to 75.500 area over the coming sessions. Ultimately, only a break and close back below that recent low that we saw at 72.35 on Friday would put the pressure back on the downside. Again, the pressure is on the downside on the medium-term basis and the downtrend is intact, but there are signs with this double bottom on a short-term basis that could open the door for some corrective upside in the sessions ahead. Dollar CAD. So dollar CAD remains locked within a very well-defined uptrend. The market has been highly constructive. Setbacks in the previous week were very well supported at around 128.60 ahead of another bounce up towards the multi-year high that was set at 31.03 the other week. But with daily studies overbought here, even if we do see a fresh break to fresh multi-year highs, the gains are now seen as limited over the short term, with the market overbought and in need of a more significant corrective pullback before we see any legitimate bullish continuation. If we do see a break back below the previous weekly low at 28.61, this could set the stage for a reversal down towards the 126 area, where a next medium-term higher low is sought out in favor of some bullish continuation. Kiwi dollar. So Kiwi has been locked within a well-defined downtrend, although over the past several days we could be seeing the formation of a short-term base while the market unwinds from some oversold studies. At this point, a break back above recent highs that we saw around 67.38, 67.39 would open the door for additional corrective upside, potentially towards the 70 area, while a break back below the low at 64.98 would open the door for fresh multi-year lows and a downside extension towards next key barriers in the 60 area. Ultimately, now The downtrend does remain intact, but there is risk for a bit more of a correction to the top side before we see any legitimate bearish continuation. SPX 500. So the S&P 500 had a nice little bounce last week, with the market trading down to as low as the 2060 area ahead of the latest break back above 2100. But gains have stalled out for now, and the topper structure since posting that May record high is still intact, with the market chopping around and potentially at risk for deeper setbacks towards and below that elusive March low around 2040. A break below 2040 would be required to open the door for a more significant decline and confirm this topping structure in place. In order to negate this structure, the market would need to break back above the May record high, which would open fresh upside and fresh record highs. Gold. So gold has been locked within a sideways chop and a tight sideways consolidation since breaking down the other week to fresh multi-year lows below 1100. At this point, this sideways trade is classified as a bearish consolidation, and we could very well see fresh setbacks in the sessions ahead down towards critical psychological barriers at 1000. At this point also, a break back above previous support at 1142, that previous multi-year low, or that previous 2015 low, would be required to take the immediate pressure off the downside.